Hi there, my name is Siam. I'm a trader. I've been trading for about 15 years and I was born and bred in Norwich and I'm still here, haven't left. And today I want to talk to you all about trading. Now this is a bit of a scary issue. A lot of people think that it's rubbish and that it's scary and that it's all one big con. And no doubt there's going to be some people watching this who are the typical naysayers saying trading is just gambling and you're a scammy salesman and traders are scum of the earth and they hurt the economy. Now, all of these are obviously opinions. Everyone has one. Some traders hurt the economy, some don't. It all depends on the type of trading you do. So the type of trading I do doesn't affect anything. It doesn't affect pension funds, the stock market in general, or the currency market. You have to understand, it's like different cups of coffee. You know, just because there's one type of bean which tastes horrible doesn't mean all coffee tastes horrible. And some people just hate coffee. So yeah, instead of clogging up the Facebook feed or the comments with "you're a con artist," etc., if you're a naysayer, you have 5 seconds to go, and we can then just crack on. Remember, in life it's always good to base your opinions around fact and valid information, not just old data. So in this video we're going to talk about the typical trading journey. I'm going to be pretty fast throughout this whole video. I have a tendency to make videos go on for hours, so I want to respect your time. We'll talk about the typical myths and pitfalls that you may encounter if you're a newbie getting into trading, and who am I and why should you care. And here is my little pledge. There's no crazy hard selling, there's no false deadlines, no false scarcity or silly marketing discounts or stuff like that. You can leave your purse or wallet in your pocket, and let's crack on. So here is the typical trading journey, and it's pretty similar to the typical business journey. First of all, you start off. In fact, if I can get my pen out here, that would be pretty handy. What colour shall we go for today? Let's use blue. Ink color and blue. Okay, yeah, so with the business, you typically come up with the idea, and you set things up, get the website all launched, all set up, and then you launch. And what most people do is they end up in the daily grind. They do this for years, and some never escape. And those that do, they can obviously they then start scaling the business and they see some profits. So obviously this is a very broad brush overview, but the theory and the typical trading journey is no different to the business world, except a lot of people always ignore the infrastructure setup phase of trading, which is why they have issues. So before you even touch a chart, you need to know why you're trading, your trading goals, the 5 M's of realistic trading. You need some daily habits or discipline procedures in order to trade effectively, otherwise you're just gambling, because there is a very fine line. Let's say there's a seesaw between gambling and trading. It's a very fine line, and if you don't put maths and discipline on your side, you're then gambling. So you need good logging software, strategy and stats. It's all about stats. And then you need to pat yourself on the back every now and then. So everyone skips all of that stuff. And also demo trading. I mean, it's a bit like flying training. If you're going to learn to fly, like military pilots, etc., and commercial pilots, they do a lot of time in the simulator before they even touch a physical aircraft. And it's no different with trading. So you may as well become consistently profitable on the real live markets, but with fake money, before you even touch your own money. So people forget that. And then you have the daily monitoring and also knowledge growth. It's what I call SEDMED. So set up, entry, journal. You have to journal your trades. Monitor, exit, journal. And then if you're doing all of this correct, then obviously you'll make some profits eventually. And it's not about the sex. So that is what everyone is so fixated on with trading. It's all about the setup and the entry and the exit, which is not true. These are actually quite insignificant when you properly understand trading. And so that the sex bit, the setup, entry and exit bit, is really just this bit here, and there's all of this that you need to do. And I would be very wary of anyone on the internet like this. Anyone that's flashing cars in cash and trading on the beach, it's all a load of bollocks. It really is. Proper traders literally don't do any of that. And also, a lot of these internet people, they're always talking about, oh, join my thingy because I've got a 90% hit rate, etc. So I would strongly avoid that. People seem to be obsessed with having a trading system which is 80 or 90% accurate, when in fact the world's best traders have 30 to 40% accurate hit rate strategies. So don't be a win rate junkie. So really quick, true story. I spent 2 years, best part of 2 years or more, in fact, 24 plus months, strategy hopping because I was fixated in the win rate. I'd find a system or online or Google or whatever. This was 15 years ago. It wasn't even Google, it was Alta Vista back then, and and I was just looking, for strategies which were good, and I'd do it for a month, and then I'd lose or I'd win, and then So strategy hopping is not good. Definitely don't do that. And also, teaching myself was a bad idea. Literally nothing worked. And you have to understand that the big money uses free resources on the internet as a playbook to rinse the retail market. So obviously, if there's a big old bank, let's just say they're moving the market, etc. And then there's little people over here, you and I, mere mortals. We're looking at the internet for cheat sheets and stuff like that, free tips, etc. Well, the banks are simply going to see what the public are consuming and reading, etc. And they're going, oh, okay. Well, the public are obviously going to try and do this. So what we're going to do, we're going to basically stab them in the back. Whilst they're doing that, we'll try and do, we'll move it in their way, and then we'll take all of their money. So you have to understand that just like with anything, if you want to become a doctor, you're not going to teach yourself. You're going to find a doctor to help you, or a professor of some sort in uni, and they will teach you what to do and what not to do. The thing is, most people that do end up teaching themselves, they end up with the occasional lucky winning streak, which is deadly, because what happens is that you always fall into overconfidence, and guess what? When a newbie trader is overconfident, they over lever. So they either place too much money on a trade, or they increase the amount of trades that they place on, which thereby increases their exposure, which all three are not good. So you have to understand trading statistics. Now, it sounds scary, trading statistics, but it's not as scary as you think. Just like if you were to run a business or set up a business, you'd need to know basic stats. Like you'd need to know your revenue, you'd need to know what your gross margin is, and also your gross profit, what your OPEX, your operational expenditure, as in what are your monthly outgoings, and then what's your net profit at the end. I mean, these are basic business stats, and trading has basic trading stats. So remember, that is the whole journey. Please don't skip stuff. And don't just go straight into the sex. So, who am I? I know I've gone pretty fast. My name is Siam Kid. And I joined the Air Force straight out of school after A-levels. I became an Air Force pilot, and during pilot training, I was also juggling learning to trade. So I was doing basically both at the same time. Air Force piloting was good, trading was bad, and then eventually I screwed up my career because my trading suddenly took off, and then my Air Force career went into the gutter. I then left, became a full-time trader. That was, again, dreadful and then good. I left too early. I guess I was overconfident. And what I found is that it's pretty handy combining business with trading. So all I do is I siphon my business profits into my trading. So I make profits in the business, and then I grow my profits via trading. So that's just all I do. By default, I've become a full-time investor. So I buy, set up businesses, and I trade. So that's me in a nutshell. Everyone is different. There's no correct way in life to do things. It's just this is the path that I've found which works for me. So all I can attest and all I can show is what I've done, what I do. I always put my money where my mouth is. And in terms of track record, business-wise, good and bad. Like I approach business with the whole, with the stat that, you're going to have a 90%, oh, you can't really see my blue writing here, but basically, I heard that you're going to have a 90% failure rate in year one of business. So I was like, okay, I'm going to set up as many businesses as I can. And then, yeah, eventually that did well. And my trading and investing has also done particularly well. Pretty much every few years I have some sort of big windfall or I call a major announcement. So I've made quite a few of these. And then in 2015, I opened up a fund. I only ran it for 11 months. But as you can see up here, after 11 months, it ended up 61.29% up. So the reason I ended it is because of the hassle. I was managing other people's money, and people were literally messaging me every minute, every hour of the day. Why is the market going down? Why is it going up? Why is my trade gone down? So it's just too stressful. So now I just trade my own money. I just prefer to trade my own money, and this was an FCA regulated fund, as you can see down here. So so I will not enter the money management business ever again. It's just far too stressful. I prefer to sit at home in my underwear like I am right now, I guess, dressed from the waist up. So yeah, here's Black Monday. Basically, during times of volatility and crashing, it's actually a really good time for traders. You can actually profit quite a lot, and it doesn't. And please don't take this the wrong way. You are not profiting from other people's misery or pain or death, etc. People are always dying. Something like 80,000 people die a month from hunger, like all that sort of stuff. So my mentality, my ethos is that let's take something like this where I made 426 grand in a day. Or what you can do is position yourself so you can profit from big events like this, and then you put it into something good, charity, and you / help people, and mainly help your family. I mean, sort yourself out before you try and help anyone else, because if you increase your means, you'll then be able to help more people. Now I know it probably sounds like I'm trying to blow stuff up my arse. Blow stuff? What is it? Blowing the trumpet up my arse or something, whatever that saying is. But seriously, life really wasn't that hunky-dory. Now, I don't typically have a sob story, like with a lot of people you see on the internet. It's like, hey, I was broke, I was on the streets, and then I made $1 billion. And I don't. I had a nice childhood. I had a nice, loving family. I'm a typical, I guess, middle-class person, really. Born and bred in Norwich, never left. It's a fine city. I'm just a normal guy, really. And my job is trading. So really, all that matters to me are my kids. I mean, these actually are old pictures now. They're 2 and 4. But yeah, that is just me in a nutshell. But I did have some issues money-wise. Like in 2011, I pretty much almost went bankrupt. I think that was the time I left the Air Force to become a full-time trader, and then I blew my life savings in no time at all. I guess I was overconfident, and that is one of the things trading can really screw you up on, because it can lull you into a false sense of security. I call it my cheese and mayo period of my life. Basically, we were in Lidl because we couldn't afford anything else, and my wife, or my girlfriend at the time, now wife, she's a keeper, she came up to me in the aisle with basically cheese in one hand and mayonnaise in the other, and obviously this looks like she's a robot, and basically shrugged. And I was like, well, and basically we were so broke, we struggled to choose whether to buy cheese or mayonnaise, and in the end we didn't get any of them because they were luxuries. In the end, we just bought more rice, because you create lovely big meals for pennies with rice. So yeah, anyway, that was stressful. So yeah, and basically going into the why of trading, I have the mentality that everything in your life is your fault. So if you're a raging success, all your fault. If you're a massive failure, it's all your fault. So basically, I I had all of these excuses. You know, I didn't want another job. I had too much debt, no prospects. I was existing. I wasn't living, and I had lack of money. And ultimately, it was all my fault. Literally, it was my fault. And I think accountability is something that a lot of people need to do. So I guess I drew a line in the sand, and I had to permanently change my situation. So this was, and also I actually had gambling issues when I was about 20 years old, no, 18 years old. I tried online gambling and that didn't go well. So I've had money troubles from a very early age, which is silly. Maxing out credit cards when you're 18, which was questionable. So yeah, so why trading? Basically, it's awesome because there's no stock. You don't have to buy widgets and store them in your garage. There's no hassling your friends. I mean, there's so many people doing multi-level marketing stuff, you know, and they're just basically imagining every one of their friends and family is a pound sign, and they're, you know, trying to flog stuff to their contacts. There's no staff involved in training. In trading. I've got about 50 staff, and it is an utter ball ache managing staff across all my businesses. It's completely tax-free. So the UK is the only place in the world with tax-free trading. So you may as well utilize it. And it really is a potent skill that no one really possesses. I would say there's probably only 0.1% of the UK population actually know how to trade. And probably of that, probably 1% know how to trade, and probably only 0.1 are successful, like properly successful. But really, the best thing about trading is that you will no longer be scared of the world, like at all, ever, because you'll understand the shenanigans going on with the world. And in fact, if you ever check me out on YouTube. So on YouTube, I put loads of free videos out there. So just type in Siam Kid, and you will see that I put out loads of videos, you know, about the global macroeconomics and all that sort of stuff, but in simple 5-year-old English. So one of the things you'll see from watching those videos is that you too will no longer be scared of the world, even if we never meet or you don't trade or whatever. Just check out some of the YouTube videos, and they'll help. And so and also, every decade, or statistically, every 8.6 years over the last 100 years, we have a market crash. And it's during these times where you can leapfrog your own personal net worth. This is a life skill. This basically means every decade you can have an opportunity to double your net worth pretty easily. And I needed something I could do in my underwear at home, and didn't want to go into porn, so went into trading, or online gambling and then trading. So and I've stuck with trading. And it really is a great skill to teach your kids. So instead of, turn your kids into assets. I'm going to be teaching my kids trading as soon as they're able to properly understand, first of all, English, and then charts. So, and it'll be probably one of the best skills to teach your kids, actually. That and business and all that sort of stuff. And the thing is, there's a big difference between the life skills and skills for hire. So, for example, cleaning your teeth every day, that is a life skill. Well, it should be. But removing a tooth, that definitely needs to be a skill for hire. You don't want to be doing that shit on your own. Just like raising children, that is a life skill. But popping one out, you need help with that. Unfortunately, we put money in the skill for hire category, where it damn right needs to be a skill for hire. And so, trading is a skill for life that will really help you identify potential downturns. So I'm recording this video in May 2020. We've just had the biggest, sharpest crash in human history, as in the quickest to a 39% drop ever. And there's more downturns to come. I see the next couple of years as a very deep global depression. So, but I'm not scared, because I'm going to profit from it. My family's going to be safe. I'm going to have a head over my roof, and I'll be able to help my closer friends and family, etc., and other people. So, so you'll be able to profit from the downturns, and peace of mind is really everything. It's all about peace of mind. So where do you trade? Like where? Well, basically, we trade the global markets. The global currency market is the biggest market on the planet. put it in perspective, the global stock market is $70 trillion, the global bond market is $100 trillion, but the global currency market is $1.4 quadrillion. It is the biggest market by far. Like, to match the whole year of stock trading, the FX market, the foreign exchange market, i.e. currencies, would match the stock market in about 12 days. It's ridiculous. So where? The UK. The way that I trade is very specific to the UK. It's completely tax-free. And what they've done is, I don't want to go into details here because it's not the right time, but basically they call it financial spread betting. It's nothing to do with like sports spread betting, but it's CFD trading in a tax wrapper. That's all it is, and it's been tax-free since the 70s. Yeah, anywhere you see someone trading on a beach on a laptop is a charlatan. So yeah, anywhere but here. So yeah, no proper trader trades on the beach or by the pool. I tried it. The sand gets in the keyboard. The sun glare. You can't see anything on your laptop because of the sun glare, and there's no freaking Wi-Fi on the beach. So yeah, ignore all of these pretenders. So yeah, we're trading the currencies, and basically the great thing with the way that we trade is that you can trade up or down, so you can go long or short. Whereas buying stocks and shares is so 1990s. You can only make money when things go up, but things are pretty much always going down these days. I mean, it's pretty much every week there's a big company going bust. And so yeah, you can literally profit going up or down. It really does not matter. In fact, a falling market moves 3.3 times faster than a rising market, and a crashing market moves about 10 to 20 times faster than a rising market. So I actually tend to make most of my money going down. So yeah, it's all about pounds per pip. So it's basically like going to your local betting shop and going, hey, there's a market over here which I want to play with. Let's call it pound dollar. And what you can then say is, for every pip it goes up, I want to bet £1, let's say. So when I say a pip is the smallest unit of movement that we care about in trading. So it's basically this one here. So if the market goes from 1.2650 to 1.2655, what this has done is it's gone up 5 pips. Okay, so what you can then say is basically, let's say you want to go up, okay, you want to go long. So you place a trade here, and let's say you go long at £1 per pip, and then things go well, it goes up, etc. And obviously this is not to scale, but let's say the market is now 1.2700. How much money have you made? Well, how many pips has it gone up? So from here to here, the market has gone up 50 pips. And because you've gone long at £1 a pip, you've made £50 tax-free profit. It's pretty good, right? And vice versa. Let's say you think it's hit this level of resistance here and you think, oh yeah, it's going to go down now. Well, you can cancel the trade and go, right, I'm now going to short it. So short means you're basically selling. And I'm going to short it at £1 per pip. And let's say you short it at that level there, and then the market does this, and you close out here, and let's say at this level here, the price is now 1.2550, let's say. Well, how many pips has it gone? So it's gone from 12700 down to 12550. So it's gone down 150 pips. Well, at £1 a pip, you've just made 150 quid profit. It's, yeah. Or even if you have like not much money in your trading account, and you're going in at 10p a pip, okay, you made £15 profit. So yeah, I would always, by the way, here's a quick bullshit warning, red flag detector. Anyone that's showing you, you know, oh yeah, all you need to do is go in at £10 per pip, and then yeah, you're going to make thousands of pounds per day. It's this is complete misleading. Going in at £10 per pip is a very large position, okay? Very large. I typically would be doing £10 a pip with an account of around 200 grand. 200, 300 grand, yeah. This is the size of my trading account where I would be going in at £10 per pip. So £1 a pip is a lot more realistic, so I would just be very careful. In our other videos we go into depth why, you know, how it works and why. But also the cool thing about the way that we trade is that you have a trading seatbelt, which is called a stop loss. So let's say you only wanted to risk £50 on a particular trade. So a lot of people think, oh god, if it goes against you, you're going to lose your shirt. Not the case. Well, so let's say you're going in here £1 a pip, and you only wanted to risk £50. Well, what you could do is set up a stop loss 50 pips away. Okay. You wouldn't set up the trade like this, but I'm just showing you for illustration purposes. So all you've done is you've set up a stop loss here, and worst case scenario is if the market just goes against you and hits your stop loss, it boots you out of the trade and all you've lost is 50 pips, i.e. £50. But if that doesn't happen, let's get can I get an eraser? Yes I can. Ah, handy. Good old PowerPoint. However, if the market, let's see if we can get a different colour. But you can use it in almost an offensive way, because if the market goes up in your favour, you can actually click, hold and drag the stop loss up, and you can basically trail the market as it goes up. So let's say your stop loss is now here, you've effectively locked in profit, and as the market goes up, you keep on trailing this up, and so let's say your stop loss is now here, and then eventually the market will roll over, it'll hit your stop loss, you get booted out, but you've just made all the profit from here all the way to here. So let's say that's, I don't know, 100 pips. Great, you've locked in profit. So again, quick broad brush overview of how you trade, and you can do this going up or down. It's beautiful. So yeah, really quickly, I want to quickly breeze through risk management, why you shouldn't focus on your win rate, and the 5 M's of realistic trading, etc. So basically, it's all about risk versus reward, and you need to look at everything in terms of R multiples. So very quickly, if you risk £100 and you end up making £100 profit, i.e. you get your 100 quid back and you make 100 quid profit, that is what's called a 1R outcome. Okay, so if you risk £100 and you make £200, guess what? That's a 2R outcome. And if you risk £100 and you lose £100, guess what? That's what's called a 1R outcome. So this is how you look at risk in terms of trading. In fact, I look at everything in my life. I look at R multiples, in business, life, everything. And let's say you place 20 odd trades, okay? And it looks a bit like this. So as you can see here, over 30 odd trades, you've got a pretty poor hit rate here, so you're losing most of the time. But look, this is why your hit rate doesn't matter, because your winners are far bigger than your losers. So in this case, if you were to add up all of these losers, you would have lost 22R, but your winners add up to 31R. So what this means is that you've made 9R profit, and let's say you're doing, I don't know, 10 trades a month, so over 3 months you've made 9R. So what this means is, yeah, so one way you can look at this is if you're risking a certain amount per trade. So let's say you're risking, I don't know, 0.5% of your total account per trade, or 0.5% times 9 equals 4.5% over 3 months, which isn't bad. Or in another way, I don't like looking at it this way. What you could look at it is go, right, if your 1R is, I don't know, 100 quid, what this means is if you've got 9R over 3 months, 9R times 100 quid means you've made 900 quid over 3 months. So there's different ways you can look at it, but yeah, that's why R multiples are quite handy. So yeah, here we've got a 23.3% win rate, yet you're still making profit, and this is why your hit rate means nothing. So yeah, as I said, if you're risking £1,000 per trade all the way down here, then whoopsie, down £1,000 per trade. Sorry, there should be a 0 there. 9R, yeah, you'd be making 9 grand. So that's R multiples. But you're probably thinking, can you actually make 300, 500, or even 1,000% profit on a trade? Because effectively, that's what it is. If you're making, let's say, like over here, look at trade 30. Here, trade 30 has made 10R. So what this effectively means is that you've made 1,000% on that ROI on that one trade, not the whole account, because as you can see, you've only made 9R. And you're probably thinking, well, that doesn't make sense. Like, can you actually do that on a trade? And also, how much should you risk on a trade? Well, let's have a look at this. So for my students in our private community, one of the things we do is that we've got a Telegram group. So every trade I place in real time, I text out in real time, and I also I do a screen capture. So like I'm doing now, I basically video what I'm doing, and then they get the trade. So here's an example. Got a couple of trades here, and if we have a look, this is it. So this trade, as you can see here, if you look up here, is pound Swissy, pound against the Swiss franc, and these two. So it's these two trades here. So I entered the market at where these yet green arrows are, so here and here. As you can see, I was shorting it. I had a 30 pip stop on that one and a 75 pip stop on this one, and the market's gone down. And as you can see, this one is currently, yeah, so this trade you can see is 404 pips in profit, but look at the stop loss. I had a 30 pip stop loss. So this is a 5.939R trade. This is 12.07 R. It's, yeah, so this is more than that 10R trade that you saw on the previous slide. So it does happen. In fact, probably once a month you'll get a nice 10R 5 or 10R trade. So yeah. And how much should you risk per trade? So here's the thing. Anyone that says, oh yeah, you need to risk 1% per trade or 5% per trade, I'm promising you now, they are losing money, or they're just a marketer. We never really risk more than 0.25% of your total account per trade. So what this means is, if you have £1,000 in your account, well, the way I work that out is, you divide it by 100, so that's your 10%. So that's, sorry, divided by 100 gives you what 1% is, so 1% is that, and then I just divide that by 4. So yeah, £2.50. So if you had a £1,000 account, you're only risking £2.50 per trade. And this is why trading really isn't risky, especially when you have maths on your side. So yeah, as I just said. So by the way, 0.5% per trade is when you know what to do. When you first start, I would highly recommend doing 0.25%. But when you get good, then yeah, eke it up to 0.5% if the maths is on your side. So now I want to quickly talk about the 5 M's of realistic trading, and this is I guess a framework of how I apply to any market. So if you're looking at a brand new market, I look at the 5 M's, and then all of a sudden you'll understand how to look at that market properly. So the first one is mechanics. So what is money? How does it flow? How does the world work, etc. So that way you get a big macro fundamental picture of the whole world, or that particular market. So then markets, you need to learn the 6 market conditions, which market to trade and which strategy to use per market. So a lot of people end up trying to apply one strategy across every freaking market condition, and that's just a recipe to lose money. Then the method, so you need to know how to execute the trades, the risk management, the process, trade analytics, your rules, and putting maths on your side. There's a lot to do here. So yeah, the method is normally a very big topic when you're learning to trade. Then the mindset, so yeah, trade and money psychology is everything. Yeah, and you need to avoid self-sabotaging traits with your trading, and everyone does it. Men are actually the worst at trading. Women are far better. They have less ego and testosterone when it comes to trading. And then the meltdowns. How to rinse the market during crashes. That is, yeah, it's game time, and we're very, very close to a global crash, a lot worse than 2008. So they're the 5 M's of realistic trading. Hopefully that makes sense. And moving on, I just want to talk about realistic expectations. So there's been a big tidal shift in trading, especially with the realistic trader in my community. So first of all, I'll talk about the typical journey. This is what you can expect to do whether you join my community or anyone else's, really. So the first year is basically a year of learning, and you can't expect to do a video course and expect to become a dentist or a doctor, etc. And trading is exactly the same. So it will take a good year to become proficient. And then I guess year 2 is where you're starting. I mean, here is like you've just got your learner plates. The first year of driving after your driving test when you're 17, etc. That's where you do the best learning. And then I guess from year 3, 4 and 5 is where you're really growing, depending on how big your account is. But typically, if you're going to manually trade, then you're not going to make any money really in year 1. So let's say 0 to, I would say probably, let's scratch that, probably minus 10% to hell, maybe plus 5%, depending how well you do. Year 2, I mean, by the end of year 2, I mean, you would have done a lot better. So you're probably looking anywhere from minus 5% to maybe 10-15%, let's just say 10%. And then year 3, 4, 5, it depends how good a learner are and you're logging properly. Yeah, then you can probably be looking, between 0 to 20% per year. So that's that. However, I am now going to discard all of these things. Discard, how can we discard all? Erase all link, there we go. Because things have changed. When you're manually trading, you are basically let's get a pen out again. So when you're manually trading, so manually, I'll just put up here. What happens is you miss setups. So you miss trades because you're either not at the screens, you're asleep, you're just not at the screens. You're sleeping, you're working, you're eating, you're whatever it is. You're not looking at the charts, etc. Also, when you're manually trading, you are emotional. No matter who you are, humans are just emotional. When you're losing a trade, you're winning a trade, there are emotions there, which is not good. And what that means is that there's less discipline. So people then react to their emotion. Discipline. So that's that. Also, risk management. You have to be really, I mean, if you have less discipline, you then have less risk management. It just goes out of the window sometimes. So you have to become like a robot. I mean, if you can do that manually, that's great, but it takes years to become like a cold, calculated trading, I guess, robot, so to speak. And because of, I guess the main thing is if you, I mean, one, yeah, you also need a positive expectancy system. But really, if you come back to this missing the trades bit, because you're asleep so much, depending on what your system is, like if I was to manually trade, I'd probably place maybe, I don't know, 100 trades a year, let's say. But if there was a way that you could trade so that you aren't missing any setups, I mean, you could easily 10x that. And so even if you're making a tiny bit of R per trade, you know, the same R, if you can just get more setups, then that'll equal more profit. So again, let's just discard all of the things, because in fact, what I'm basically leading to, the real thing which has been the tidal shift in trading, is that most of our community are now we're not manually trading. We're I guess no longer manual, so we're no longer screen slaves or slaves to our charts. We're basically now bot tinkerers. So basically we have a state-of-the-art, very expensive, it's been taking a very long time to develop, but we have a state-of-the-art machine learning trading bot, and that basically gets rid of all of this. So all of this rubbish here, the missing trades, emotional, less discipline, bad risk management, etc. That's no longer a thing. We have a machine learning bot which is just freaking insane. So I'll share that with you in a second, but basically, I guess if you are any of these, I would highly recommend not to trade. So if you're financially unstable, this is not for you. If you're looking for quick cash flow, again, I mean, with the bot, it is a game changer, but I really wouldn't do this for cash flow. I'd do this to grow an account, as in a trading account. If you're not prepared to dedicate the time, again, this isn't for you. Although the bot will be earning for you 5.5, so 24 hours a day, 5.5 days a week, you still need to put in the effort and learn. And again, there's the obvious money requirement. So you should have at least, I would say, £10,000 to put into this trading project. Now obviously some of that money is going to go into training, so as in investing in your own mind and knowledge, and a portion of that is going to go into your trading account, or with us, your robot account, so to speak. So hopefully that makes sense. What I really don't want to see people do is go big on their credit card, just to, it's just a downward spiral the moment you start borrowing money. It's not good. So they're the three things which I said that you would learn. Hopefully that's all made sense. I guess you basically have two options now. You can either do nothing. If trading isn't for you, that's great. If trading isn't for you, then perhaps look at business. The WAP.org is a great place to learn how to set up, run and grow a business from scratch. Or if trading is for you and you want to find out a bit more about the realistic trader, then I guess just continue listening for the next, 5-10 minutes or so. I'm just going to show you all about the realistic trader community. So in a nutshell, in fact, if we just exit out of this, and I will basically show you the online elements of it all. So let's look at the Facebook group. So first of all, if I log in, RT community, here we go. So this is our Facebook group. So we're a small community. There's only about 200 of us, 264 to be precise. And this is it. This is our private group. So everyone is talking about trading, asking questions. It's great. If you have any questions at all, pop them in here. The community will answer them, and also the mentors and myself. So we're constantly sharing stuff in there. So that's the Facebook group. And then on the Telegram group, if we just so we have a Telegram group where I send out any important announcements, etc., or if there are any really important trades, stuff like that. That's pretty good. And then also here's our trading log. So this is, I think, a first for any type of community like this, but we have a fully transparent trading log. So obviously this is my personal log. You can see all sorts of different things, but it gives you all sorts of stats, which is really quite good. And then the amazing thing here is that we can have access to everyone else's trading log. So you can see who's got the most pips in the last 30 odd days, how much actual money has been made in the last 30 days, the best strategies, etc., the best loggers, etc. So for example, if we wanted to have a look at, say, Sally, okay, so we can have a look at Sally's log, see what trades she's made, see what account, yeah, she's basically, the market's been crashing recently, and so we've all basically made a fair chunk of profit due to that. But yeah, so, and you can even see what trade she's done. So for example, let's say I don't know, ones which have been completed, let's say this one. So in this one only made, yeah, small loss, but it shows you the actual chart of where she got in, got out, etc., etc. So that's our trading log, and then, in fact, I'll come back to the bot. But yeah, this is our 12-month training program, so it's CPD accredited, etc. But yeah, these are all, I guess, all the videos that you need to go through. I mean, you can binge watch them like a new Netflix if you wish. So yeah, for example, if we click on that, sometimes there's a bit of text, etc. And most of them there's a video. Let's just skip forward. Okay, so here we are in the office, and this is Pips, in case you haven't already seen it. So yeah, that's Pips, my lovely dog. Can't be a trader without a dog called Pips. So that's that. And then finally we have the bot. So this bot is rather impressive. So it's taken a long time, but basically it stops us from being a screen slave, as I mentioned. So we've been demo trading and testing it for months, and then not long ago I opened up a live 15 grand account, and basically shared with the community, hey, 15 grand account, let's connect the bot, etc. And it's been rather amazing. So the thing is, I've just topped up the account. So for example, if we go, so you can see it's connected to the live account, we can actually log in. I'll show you. So you go into myfxcm.co.uk. This is just a way to access the log, and then we can go to reports. So generated report, so since open up till now, generate report. And so this is the report. So if we scroll to the bottom, you can see I put in 15 grand, what was it, 10th of February, and by the 13th of Feb we placed the first trade. So if we skip forward a month, so to the 13th of March, 13th of March, I'd call it the 12th. Here we go. The account was up by £1,871. So divided by 15k, yeah, it's up 12.4%. And then since then, yeah, it's been just around the same. So I've just put in a little bit of extra money, but as you can see, that is the account. And when you go to the dashboard, you can see what we're up at the moment, 12.61%. And you can have several bots. I've got full autopilot on, so typically there's non-autopilot and full autopilot. If it's for example off, and this is basically semi-autopilot. So when it's off, basically what happens is the bot will send you text. So this is where you can still be involved in the process, where, for example, let's just pick a random one. So, hey Simon, found a trendy jibe, blah blah blah, do you want to take it? You click it, and it shows you the screenshot of where it is. Give it a second. It's probably a while. Oh yeah, here we go. So in this case, if we zoom in a bit, it's showing us that that's where the stop loss would be. This is the take profit. We entered here. Oh, yeah. Normally there's a buy and a yes and a no. So if you press yes on your phone, it then places a trade for you. In this case, you can see I press yes, and then the trade hit profit. So that's that. So that's if you wanted to basically be involved. I've personally just got my bot on autopilot, where it's just taking the trade for me. Again, you can also play around with the settings. So for example, you can see I've got all the majors and minors, all the different time frames, etc. Let's put it on. I've got a quite aggressive setting, but you can just put it on a pretty soft setting. So let's say risk multiplier of 3. You can again edit all sorts of different things, and you can do a little test. So here we go. Yeah, so obviously that's the balance over time, and then you can see the monthly performance. So yeah, this is a pretty conservative setting. So this is why I cringe when I say, you know, it makes, you know, 5 to 10% per month on average on a conservative setting, because it does. So what this is basically showing is the return that the bot made if you set it from January 2011 and left it until now. It's basically, yeah, these are returns. So even the worst month it did was minus 9.5%, 9.6%. So yeah, and down here I would ignore this bit here, because this is basically showing you, you know, what would happen if you just did nothing and just let it accumulate and, you know, compound interest, etc. But this is the annualized return. This is the bit which is the important thing. So yeah, you're doubling your money basically every year with this particular setting. And the drawdown is really impressive. So that means peak to trough. So the worst, you know, the market went against you from peak to trough. So if you look at this, it doesn't matter how much money. So I guess from peak to a trough, it was only 18%. So 59% hit rate, etc. And you can even check. You can like foolproof it. Like, so it shows you every single trade it placed. So if we, I don't know, click a random page. Wow, that was a nice winning streak. You can click on any of these and it says loading, there we go, and it'll show you that here you entered there and it took profit here. So that was a profitable trade there, and you can actually see the setup. So yeah, that is the bot. Yeah. Okay, so you've just seen what we do. So if you go to therealistictrader.com, this is us. Now everything you just saw, as in the whole RT community, is on this RT community tab here. But the thing is, to become a full member, it's quite expensive. It's either $400-800 up front or £500 a month for 12 months. And I'm more than aware that you've only just met me online, virtually, obviously. So it's a bit of a steep thing to go up front. And so this is why we created a thing called the trading test drive. So you basically get 2 months full access to the Realistic Trader. So what happens is you get access to the Facebook group for 2 months, the trading bot for 2 months, but on a dummy account, not on a live account, and you get the first 10-12 hours worth of videos. So that way you can learn everything, or a hell of a lot, so you know if trading is right for you. And in fact, even if you just do the trading test drive, it's you'll be able to trade on your own even if you don't join us later. And with the dummy bot, you have it on the demo account, and it won't auto trade for you, but it'll text you alerts and you can press yes or no to take the trade, etc. So this is everything you'll learn here. You'll go through all of this. There's loads and loads of videos and quizzes and stuff like that. And yeah, it's just £99. So, and it's fully refundable. If you're not happy, just ask for it back and you get it back. So you simply just click that, pop your details below. That then goes through the payment page, and then that's it. You'll then have access to everything, and then we will hopefully see you in the RT group. And yeah, and then also you'll also get the bot. So the first thing I recommend doing, so this is my testing bot. I'm testing all sorts of different things here, but yeah, when you first get on here, go to the setup videos, click video, and then watch video 1. It will help you with the setup of the bot, blah blah blah. TheRealisticTrader.com trading test drive. It's only 99 quid. It'll literally be the best £99 you've ever spent. There's no deadline, whatever. We're not going anywhere. It's just here. So yeah, hopefully see you on the other side. Toodles. Thank you.